Hello everybody, Jackson here with the Well Squad. Today we'll be talking about stocks, of course, because there's a lot of opportunity out there and we just have to find and dig and take advantage of these prices. Of course, on my screen you see a lot of red. That is a good sign if you are cash heavy. It is a bad sign if you are not. Well, hopefully you are. Hopefully you have at least some cash on standby waiting for even better prices because better prices have arrived. We're looking at Meta right now, formerly Facebook, trading at $90. $90 was once approaching 400, now at 90, right? Down 70% for once a $1 trillion company. Last time Facebook or Meta was this low was January 2016, 8 years ago, even longer. So you have to realize that these are unprecedented times within the market. Square, right? That one took a while to fall. We're looking at, the recent ones, right? Amazon, one of these. Earnings report. Let's actually zoom in on this one. Earnings report was pretty bad, right? You can see they beat on EPS, but the revenues were not as good, barely, and their guidance for next quarter, next year, not very good as well. So we could scroll back out here. You see it fell to 90 in pre-market trading, then opened at 97, went all the way up to 103, had an okay day, a bad day, and another bad day, and here we are. Scroll out 5 years, you're looking to see that Amazon has not been this price since mid-COVID. Mid-COVID being March, and you can see right here, these are by weekly candles. March 23rd, if you bought Amazon, you are now break even if you held the entire time, right? You could have doubled your money, sure, 90 to 180, but now you're back down to 90. This is not uncommon to see this of many stocks going below their COVID prices. Home Depot still doing pretty well compared to tech. COVID would be right around $200. It's trading at 288. Qualcomm, same thing here, 68. We're at 110. Nike is trading right around those COVID prices, $80 to $90. Google, $86 is crazy, crazy cheap. Before COVID, it was trading for 75. At the very depths of COVID, trade for around 50. So realistically, we have a little bit more to go for Google if you are looking at the COVID price range, right? Of course, a good way to understand that is to look at the earnings, right? Earnings beforehand, you're looking at 71 cents a share, 50 cents a share, 76. Now we're looking at $1.21, $1.06, right? So earnings have gone up 30, 50%, maybe even 100%, right? So in this case, it's gone up around, 30%. I'm sorry, 50%, 40%. So why is the stock trading? The stock is trading pretty high since then. So if it goes even lower, then you got yourself a deal. Apple still doing very, very well since COVID, 60s, and you can see prices right now are 140. So it'd have to double, about 130% increase since COVID. Microsoft trading for 220 during COVID was 150. We're still doing good there. QQQ, this is the NASDAQ, the very tippity top before COVID was trading for 235. Right now we're trading for 265, so we got a ways to go. Broadcom, another one like Qualcomm that makes those semiconductors. You can see 230s, 250s during COVID. We're at 456. So a lot of these companies, Qualcomm and Broadcom included, aren't hurt too bad. From the highs, sure, but from the lows, not even comparable. We can look at Visa, trading for 150 at the very depths, now at 200, bounced back pretty nicely. 3M bounced back pretty nicely lately, trading below those COVID prices. Starbucks also bounced back pretty nice, trading higher than those COVID prices. AMD at 58. You can see COVID was right here at 40s. Adobe, we got another one here, trading below those COVID prices. So the mega caps, right? We're looking specifically. I can actually just click right here. Apple doing fine, doing mighty fine. Amazon hurting, right? See 96, price right now is 92. Google hurting. You can see prices of 60, it's at 86, but it was at 150. So not hurting as bad as Amazon, but still hurting relatively bad compared to the market. But of course, none have fallen worse than Meta. You can see right here, 150 was the depths of COVID. It hit 380, now it's at 90. So it seems like we've gone in a full cycle within the last 2 years. We've gone from sell everything to buy everything to sell everything, including your house, your car, even more so than during COVID. When the market is like this on a Fed decision day, you know it's bad, and you can tell it's a Fed decision day because, well, there's a calendar you could look at, but also you could just see the price movements. This is not by a market-wide random price increase and decrease. It's from news coming out. You can see the SP 500 trained for 383. Then after the Fed decision, 387 for, you can see a couple minutes here. Then fell from 387 down to 375. And the day down 2.5%. Once in the positive. So with the Fed hiking 0.75%, it doesn't seem like it's going to stop anytime soon. This madness. If you don't know what 0.75 is, it's just the interest rate hike. You can learn more about that in CNBC or something. But meanwhile, all these companies and all of what we're really looking for is for economic activity to slow down, right? That's what the Fed is trying to hope for, but they're not really pushing that yet because inflation is at all-time highs, right? You want inflation to slow down, you're going to have to slow down economic spending, and the Fed is not willing to do that. So they're going slow, right? If you get a 1% increase, sure, it's going to be devastating to the economy, but it will help in the long run. Right now, it's a slow death. That's what's happening in the market. So all I hope, guys, is that you have money on standby. We are in unprecedented times. The SP 500 not as hurt as it was. You can see we are up. That's actually the percentage here, 7% from the lows. Meanwhile, stocks like Amazon and Google have never been lower. Amazon at 92, Google at 86, 87, and Microsoft at 220. I hope you are out there making more money just to compensate for this loss in the market. That's the best approach you could ever take. Meanwhile, just continuously pump money into the market with good opportunities. You don't want to just throw money at everything. You want good opportunities. That's really all I could say. Hopefully you are doing well out there. Just know that there's worse positions for people out there right now, worse than what you're doing. There could be people who bought Carvana at 300, now it's at 20, something like that, right? There's people out there that are still holding those stocks. So don't worry, there's always someone losing more money than you. I hope that comforts you in some way, and hopefully we can make some more money by the end of the week. Thank you for watching, and until next time.